This is the James Sinclair Q&A show. It's the big entrepreneurial show, and I'm here with Gary Dassin. We're going to be talking about creative property finance. Let's go. So, Gaz, welcome back to the big show. Now, I've known Gary for a while. He's come to some of my seminars and stuff, and I'm sure you've benefited from some of the stuff that we've been teaching to entrepreneurs and business owners. But I know you are the man to raise finance for entrepreneurs and business owners, especially in property. Yep. Not so much for trading businesses, more property.
More property related, yeah.
Just hit me with it, 30 seconds, on why you're so beautiful.
Well, thank you, sir.
That's all right.
My name's Gary Dassin. I'm the owner of Active Mortgage. And we specialise in making it easy for business owners and property investors to buy and invest in property. Recently won Best Small Broker of the Year at the Mortgage Strategy Awards.
What's this dude here in the red? He makes all your content.
He is my chudders.
So just behind the screens, we've got another chudders, and over there's Gary's book. Can you just throw it over to us, mate? We're very relaxed on our shows. That's it. We might be able to get his hat.
As well. He's
hey,
not
Jack.
Just chudders. He's Jack.
I wanted you to throw it over so we can get it on shot. Let's do that again, because I just think it'd be funny. Just throw it over, like imagine that, just like that. And this is Gary's book. Here it is. Look at that. It is. This is a proper book, isn't it, mate?
It is a proper book. It's 30,000 words of book.
Yeah. A lot of pictures in here. There's no pictures. No pictures.
I moved home as a company director in 2015. Self-cert mortgages have been abolished.
Yep.
And just found it a nightmare trying to get a mortgage and move in house.
So for business owners that are trying to get mortgages, the classic thing to do is depress profits in most businesses, so you pay as little as tax as possible. I've been saying for years that if you pay some tax, actually the glory gates open and you can start borrowing, investing in properties and blah, blah, blah. Yep. And in fact, if you get a decent accountant, you can show tax, you can get annual investment allowance, R&D and stuff like that. There's loads of good ways of doing it.
Yep.
And we were talking before we came on air about some of the tricks that business owners used to do, like they used to go on salary for a few months, didn't they, and then come off. But you was telling me the banks are like little detectives now, aren't they?
Yeah. Since the credit crunch,
I
got my first two mortgages. Just signing that lovely little bit of paper that said I could afford my mortgage. That was all. That was
self-cert, wasn't it?
Self-certified.
I mean, people like that. So if you're, I don't know, 22, 23, 24, 25, that you would just not believe what that is. But literally 12 years ago, 15 years ago, 10 years ago, maybe just 10 years.
2014 it was abolished.
Yeah, like you could, it was hard to get then though, wasn't it? It was getting harder. Where you could just say, I earn £1 million a year. And even if you didn't, you could say, I mean, I can't believe, like now I'm saying it is like a land of fancy, isn't it? That you could just say, that's how much I earn.
And that was it.
And you didn't have to prove it.
No. Below 75% of the property's value, they needed no proof of income, no bank statements, pretty much nothing, and you could get your mortgage done.
So what made them decide to do it or not?
Well, because of the credit crunch and all the bad investments that mostly went on.
But there must have been some check and balance.
What, back in...
Yeah, when they were...
There was some, but it was just easy.
But you could fudge it as well, I suppose.
Yeah, but there was ways around it, and... Not that I ever did anything unethical. I would consider myself an ethical self-cert advisor. I'd want to see that somebody would be able to pay it back. But the problem was, and why the credit crunch came about, is because they started lending money to the wrong people.
Yeah.
Who couldn't afford it and who had bad debt and who weren't able to repay the loans.
Yeah, not so much in this country, Gary. I have to stick up for...
UK was good.
The UK was good. It's because of casino banking that affected... And I get very cross about it because what the banks did is they also starved SME businesses, which stopped them employing people of capital they needed because, all of the banks done casino lending to, America. You thought we had it bad. America really... I've always said, like, even the 2007, 8, 9 credit crunch was nothing like what some parts of the world had. We've got a holiday home in Spain. No one knows what a recession is until you see what happened in Spain and what happened in America in some parts. But, that's for another day.
I think of the film.
Yeah, The Big Short you're thinking of. It's a great film, yeah.
You should watch that if you've got an interest in property or an
interest in
I've watched
it because I know the name. And you're talking to the
listeners and watchers and voyeurs.
Yeah, I get it. No, I get it. I joke, mate.
Should watch it.
So I'm a business owner.
Yep.
And I want to. So you're not just for the house you want to live in.
No,
you also help buy to let.
But that's what this is based on.
Yeah. But I suppose there's some guides here on how to
100%.
buy-to-let pros and cons. I mean, open it up here.
Oh, look at that.
Buy-to-let V's pension.
Yeah.
Pension pros and costs. So I'm going to ask here. I mean, I don't want to. I am my own pension, but I think that's how an entrepreneur thinks.
Yep.
What about you? Do you think you should invest in a pension or do buy-to-let?
Personally, buy-to-let.
Yeah.
I think
why?
you can, because investing in assets, there's a reason why they say safe as houses.
Yeah.
You hear of all the pensions going wrong.
Yeah.
They're affected by interest rates. They're affected by the market.
Yeah.
Property's gone up 100% every 10 years since the 1900s.
Yeah.
And why would it suddenly change?
Well, and here's the other thing that people need to remember about pensions. Most pension funds, a big chunk of the money, guess what they invest that money in? Property.
Yeah.
So it's like, why would you not want to do it yourself? Every industrial estate that's of a serious size in this country is owned by a pension fund.
Yeah.
So they're investing into property. I mean, mainly commercial to give them their dues, but I think that needs to be said. So how do you help business owners? I'm a business owner.
Yep.
My business is turning 300 grand. I'm making £40,000 a year profit. Is that usually what you see, that sort of number?
No, we tend to now. We get a whole plethora. So we get a range from sole traders,
Yeah.
who are in their first 1 or 2 years trading,
Yeah.
right the way through to limited company business owners who are turning over £10 million and got 200 grand's worth of profit.
Yeah.
Looking for £1 million or £1.5 million mortgages.
Yeah.
I did one recently where he bid to HSBC and we got him an offer within 17 days. And we're
On 10 million turnover with 200,000 profit.
Yeah. Yeah, £1.5 million mortgage, had an offer within 17 days. And he'd just been messed about by HSBC, making him jump through all the hoops, become a circus performer and provide everything but the kitchen sink.
So why did you get it through and he couldn't with HSBC? So he
Because
tried
as a broker, he banks with HSBC, all his commercial lending is HSBC.
Yeah.
But from a residential point of view, as a broker, we have access to 180 lenders.
But you still did it with HSBC?
No, we did it with somebody else.
Who did you do it with? Or you're not allowed to say? Wow.
Metro.
So that's the difference, isn't it?
Yeah.
So like I bank with my bank, my first port of call would always be, because I've got a relationship with them, and I would go with my trading bank where I'm trading the business route, because I think that's the natural thing, because you transact with them pretty much every day, every day. So you go there, but they were making him swing hoops and do all of that silly dancing. So then you just went to the whole market and made a big difference.
And found the right lender for him, because the thing is, it's like square peg round hole.
Yeah.
So even just because you bank with them doesn't mean you fit their criteria.
Absolutely.
And that's where, when building the book, we came up with the active methodology.
Yeah.
So it follows affordability, criteria, terms, go and identify your home, get your victory, and then we help you become entrepreneurial with property and get one property every year for 10 years.
Yeah.
So within the first
that is what I teach. That's what I teach. You get one a year and then after 10 years, you got 10 properties.
Job done.
Mate, you're making some serious...
Yeah. Buy your commercial premises and buy them in your own name or your own SPV. Rent it back to your business. So if you sell the business, you've still got the asset. So
Metro, what deposit did you have to put into that?
Now you're asking.
But roughly, you must know.
It was, I'm trying to think if it was 15% or 20%. Round about that. The larger the mortgage, the bigger the deposit needs to be. So you're ranging, if you're going for something, property of 500,000, 10% deposit would be always my minimum recommendation anyway.
Yeah.
If you're going for something for 750 upwards, then you're looking at 15% deposit, 20% deposit, 25% deposit.
And what do people lending that over now? 35 years? Are they pushing it to that?
Yeah, you can go 35 years, providing it doesn't go past 70 for most self-employed people. And as long as you're not doing a job, like you and I are office-based mostly, so it's feasible for us to work till 70. That age is slowly getting higher as well. So there are lenders who will lend to 85.
The world is changing, isn't it?
Yeah.
I mean, I always sort of spout this fact off. In the 1920s, if you made it to 45, you were considered old and very lucky. Yeah. If someone died at 45 now, it'd be considered a tragedy, wouldn't it?
Yeah.
And in 100 years, that's what's happened to humans.
Yeah. We're living longer.
Even someone dying at 70 now, people would be sad about, wouldn't they?
Yeah.
They'd be like, oh my
Definitely.
God.
Well, we were saying before, my dad's 70, born in 1942, so 77. Still works a 4-day week, runs a £10 million a year company, has my kids on a Wednesday, and that's what he does and what he's known. And all his mates sit at home and, one of them reviews restaurants as part of his podcast that he does, and another one is suffering a little bit with cancer at the moment, and another one's not working and just literally does nothing, and he's like, I can't do what they're doing. You know, I need to do something with myself, and that's the entrepreneurial spirit. So
let's find the synergies here. Do you think business owners should buy the most expensive house that they can get and enjoy the tax-free capital growth on it as time goes on, or not?
Personally, so I did this myself. 2015, my eldest was starting school. Needed to move, thought, right, I want to get into a house where I can focus on my business, I can focus on investing. So we stretched our affordability to get that house and pushed the profit through to get that house in that year. And then now my view is focus on the business. We're in the house we're going to be in for at least 10 years because my youngest is 1. And then now start investing.
Because there's a school of thought, like I know some seriously wealthy people that rent the house they live in, but then invest their money.
The Kiyosaki method.
And I think if you lived in America, I get that, because I don't think they get the same tax breaks on capital growth as we do in the UK. But if you buy a house in the UK for £500,000 and 5 years later you can sell it for 1.5 because you've done some work on it, maybe you've invested 150 grand on top, that's tax-free money. And I can't see why that's not sensible to do. And especially if you're a business owner and the rates are low on, money's cheap to borrow right now, I just think that, you know, that's a smart thing to do, and it's how I think, where lots of people don't. So, and also, you know, how much money do you want to make? If you want to put in your own kitchen, or you want to have this in your own house, and you want to paint the wall some stupid colour because that's what you want to do you really want to go through life having to ask someone's permission to do that when someone? So I have that feed into it, because, you know, once you've got enough, you know, and then it's not. And then I obviously love investing in property and stuff. So, are you in my camp, or are you disagreeing with me?
I'm completely in your camp.
Okay.
I think you keep yourself.
I was hoping you was going to disagree with me, because I like a Barney on the show.
I've had it. I think. Why would you want to put your life, and as a dad of 3 and a husband, why would I want to put my life in somebody else's hands where they can make the decisions and can stop me doing the things that I want to do? But I also believe that with your own residential home, you shouldn't go below 65% of its value. You should keep yourself geared at 65% of its value.
Loan to value,
Yeah, because if you pay the whole mortgage off, you have got, potentially on £1 million house, you've got 650 grand's worth of money doing nothing. Why would you do that?
So you like leveraging cash, do you?
So I think it's good to still have a mortgage on your residence. And this is where one of the things that I think like a business owner first.
Because it's the cheapest money, isn't it, as well?
You can borrow, you know, I'm borrowing at the moment at like 1.89%.
That's
a 5-year fix.
So that's for your own house.
That's for my own
compare
house.
That to buy to let. What are we looking at?
2% to 3%. And then if you put it in a limited company SPV, 2.5 to 3.5.
And you find it. So how easy is it? So we've got a house, we've got a wealth plan, we want to buy a house a year. So on those properties we want income rather than capital growth, really, don't we? We want
cash flow,
cash flow generation. So that's how I see it. The house you live in is your capital growth project.
Correct.
That's the one that's going to make the big amounts of capital. The ones that we buy, the 10, I want to be income driven, and then if we get capital growth from it, it's a lovely bonus. That's my methodology. So are you using 10 different mortgage lenders for that? Are you shopping the market, or are you trying to get a portfolio loan together, or do you start shopping the market then put a portfolio loan as time goes on?
Portfolio loans on research lately actually work out more expensive. They used to be way more beneficial, but now, because they brought the laws in around portfolio landlords, so as soon as you own number 4, you become a portfolio landlord. Your whole portfolio needs to be geared at less than 75% loan to value. It very much depends on what your strategy is. You know, if you're doing single lets, if you're doing HMOs, if you're doing serviced accommodation, because things have got a little bit more sexier around property now, haven't they? It's not just buy a single let. You can get a HMO where you can get 4 or 5 times the amount.
Well, here's the thing that I have for business owners, because obviously loads of people come to me going, I want to do serviced accommodation, rent to rent, HMOs and all of that stuff. And I always say, well, look, you know, having a trade in business is where the most profit is. The properties that you buy, if you're a business owner, should be passive as much as possible, because you don't want them to divert your energies into there, because the business is so much more profitable if you get it right. So what sort of properties are you looking at to buy in your 10 when you go and get up to 10?
So I'm doing something slightly different because I'm in a bit of a lucky situation. So I've got clients who have got cash, and I've got other clients who are builders, and saying to me, Gary, I want to start doing it for myself. I want to stop doing it for other people. So I'm almost playing broker between these two parties now, because they're earning nothing in the bank. So what we're working on at the moment, for example, is there's a house locally. It's got planning permission to put a house on the side on a piece of land. It's a 3-bed that you can extend to a 4. So I've worked out a development loan to buy that house. I've got cash coming from one of my clients that we're going to pay them 10% per year. And then my other clients are going to build it out.
So that's like running a business, isn't it?
Not really, because they're doing the building.
But once it's done, then they're going to sell the...
Then we're going to sell
it, keep make
the profits, and then I'm going to buy single lets.
That's what I wanted to find out. So you would choose single lets over HMO service accommodation, because
I'm a business owner.
I get it. And what criteria do you have for those single lets in your mind? What do you think?
Not flats, because you've got all the charges and fees and everything that come with them.
Mate, me and you, we need to start sleeping together. So I'm getting more attracted to you by the minute, because that's good. I agree.
Something that has always got local amenities, walking to a shop, walking to either the school or in a good catchment area, or got a doctor's surgery or something like that nearby.
What about values to rent? What part of the world have you thought about
that? It depends where you can get the yield. I think it's, you've got to be looking at minimum 8% realistically. It's very hard in where we are in Essex, because the properties are so high now.
Do you think we're going to have a correction at some point? I mean, I keep getting proved wrong by this. I've been saying
it's going to happen. I think it's stalemating at the moment.
Well, you say that, but I read in the Telegraph on Sunday that people are now bored of Brexit and they're just buying again.
Yeah. Well, I haven't seen a slowdown in us. The difference is I run a Facebook group for mortgage advisors, and there's 600 in there, and everyone that's linked to an estate agent is moaning because nobody's going into the estate agents. But the ones who specialise in property investment, who partner with property companies, who have business owners as a niche, property investors like we do, they're always buying. So we're busier than ever.
And they're negotiating better deals because the estate... I mean, that's great. If no one's going into the estate agents, and I've worked with some estate agents and I concur, that's what I'm hearing from them. But that's great news to the investor, because they can go in and say, well, look, you've had it up for 300 grand, but I'll give you 270. But that's such a huge discount. It's like £30,000 or even £50,000 off. When it's a buoyant market, those things get harder and harder to get your grubby hands on, don't they?
Well, one of my clients who we work a lot with, he will go to Rightmove and all those sites, and he'll look at what's currently on the market to sell, what's currently on the market to rent, because that's a motivated seller. And he'll go to them, providing it's got something in terms of it. He'll say, look, I'll do an option with you.
Sorry, let's just understand that. So it's a landlord that's renting it and selling it. He finds those...
Potentially, or someone who has got a house up. Yeah, it will be a landlord who's renting and selling.
Yeah, and so he goes on both Rightmove rent and Rightmove for sale.
Yeah, and tries to find those
properties. Because he knows that landlord doesn't want to be a landlord anymore.
Correct. And he'll look at that property, and providing there's something he can do to it, because generally they're in a bit of a shit state. If he can make some money on it and tart it up or improve it or do something like that.
And is he doing lease options on that?
He'll buy it, or he'll get a lease option on it, improve it for the landlord, and then effectively, once it's gone up in value, he'll then actually complete on the purchase. So actually, he's getting more from...
Does he buy
split it with the vendor?
And he pays the stamp duty when he actually does the value sale, so he's just got I mean, that's... And lots and lots of people are doing that now. I mean, it's massive in America, isn't it, and stuff.
Commercial to resi is the other one as well, because you avoid that stamp duty aspect.
Just so some people might not know what a lease option agreement is. It's been happening in businesses. I've been using them in businesses forever. It's where you
use them on cars.
It's basically and then you pay for it down the road.
You agree the price now. And say, I'm going to buy this in 3 years or 5 years. If you don't buy it in that period, then it expires. But you keep all the rent. You can buy it during that period.
And you service his loan at that point.
Correct.
And does he need to get permission from his mortgage company that he's doing that?
Yeah, so from the vendor's mortgage company, he will get permission or make sure that it's on the right type of mortgage to do it. But generally, he might even just do it as a buy, refurb, refinance. But rather than having to, or buy, refurb, sell potentially.
Yeah.
So rather than having to pay the stamp duty twice, he'll effectively buy it, refurb it whilst he's got the lease option on it, then buy it at the increased value, which means he's paying a little bit more in stamp duty.
Yeah.
But actually, he's created his own equity.
Yeah, of course, yeah.
And then he doesn't have to have so much of a need of deposit.
I just wonder as well if, I mean, that's great for valuer's purposes as well, isn't it? If he's buying it at that and then he can prove it to the mortgage company. Just wonder if, have you met people that have had landlords that, so the original landlord go, well, this is now gone up in value, I've got the ump about this, and they want to renegade on the deal? That's sometimes an issue, isn't it?
Yeah, well, I haven't had it yet. I think it probably could be.
Because I know some people.
One of those new property investment strategies, isn't it? It's been around for a long time, but it's I would say it's a new area for us.
Just got to make sure your legals are.
Yeah, you need a good solicitor.
Right, I mean, that's why it's easier on business, because you take on the staff and they take on all the responsibility. That's why, you know, they don't want all of that, and they're not going to take on all the staff back, and you start paying for it. I mean, that's, if it was a lease option agreement for me, and I don't know why no one does this, is I would start paying down some of what you've agreed to pay them from day one, so that when it gets to year 5, you've already paid them a big chunk of money. Therefore, I just think it's a much smarter way of proving the case. We've already had
100%
thousands and thousands of pounds off me, because even if you just said, right, I'm going to pay you £250 a month off of the capital amount, and then you just, and then so it's a break even
in the bank.
Break even in terms of cash flow then. So your profit, you're just paying off the thing, and then when it comes out, you refinance out, but you just prove the point that you've been given. So just in case, I just worry if it goes to court and some judge goes, oh, hang on a sec, you didn't get a proper legal contract in place, you've had all the money, and then you're benefiting it. And I just wonder if that might happen. But so if you paid them, then the judge can say, well, look, you've had cash out of this, haven't you? It's not just service the debt.
Yeah.
You know?
Well, we don't really see it at that stage, because we get it at the stage right at the very end of that kind of process. And then do the mortgage at that point in time.
Because when I do it in business, I'm paying them cash every month that will clear the debt. And then at any point I say I can pay you a lump sum. So if I buy someone's business, say, right, it's £1 million and you're going to give me 10 years to pay it. If I just pay them £30,000 a year, for example, over 10 years I paid them 300,000, then I paid them 700,000, they can never turn around and say, well, I want it back.
Because you've already paid them. It makes sense.
And I just wonder, you know, it's difficult, but I mean, I see lots of people doing it, but I'm a big believer, if you're a business owner, you want simple, passive income property strategies that
keep it simple.
Because that is running a business. If you're doing all that, and if that is your business, then that is your business. But you want to concentrate on the mothership, don't you? And this is like a pension plan. That's how I want to say.
It's a sideline project. I think it is. You know, anyone on the rich list has generally got property in their portfolio.
Absolutely. But it's secondary to the primary, isn't it? Because the business, if you get the business really right, don't have to do all these jiggery-pokery strategies, because you'll be spinning off deposits that you want to invest anyway.
Exactly.
And it just, to me, seems so much more like, if you've got a business that makes £200,000 a year, you know, and you can take £50,000 and put it into property each year. You know, within 10 years, you've got 10 houses, no jiggery-pokery. And the banks always find out if you're up to jiggery-pokery, don't you? And they get the up with it, don't they?
100%.
They do. How strict are banks on lending to business owners and entrepreneurs, in your opinion, Gary?
For residential, very. Because it's your residential home and it's all based on affordability. From a property investment point of view, it's so much easier.
Wow, so that's interesting.
It's, you know, things like minimum 25 grand a year income, but there's now lenders who don't have any minimum income requirements for buy-to-lets.
Are they expensive?
No, there's just different criteria. And this is the thing, is the criteria ranges. You can go to 5 different lenders who could be your top 5 in a list, and each of them will have a different method of assessment, because they've each got their own USP, their own niche, their own preference.
What about low value properties? If you're buying something for 75 grand, is there less people that like doing that?
Yeah, so short, you know, if you're buying a leasehold property, less than 75 years is a nightmare. If you're buying something at 75 grand, then realistically, what are we talking, 25% deposit? You know, that's going to put you underneath £50,000 worth of mortgage. That becomes a nightmare.
So minimum 50,000.
Minimum 50 grand.
So are you trying to get people, like, just buy a £100,000 house that makes a decent yield, So where is I'm asking, like, what's the, someone puts something across your desk, go, right, this is a good, easy one. It's not too expensive. It's not too cheap. Well, what's the?
Well, the main thing is everything's based on the rent.
Yeah.
So income doesn't necessarily come into it. The way in which they assess now is they use the stress test.
Yeah.
So the rental income has to be 145% of the interest-only mortgage payment, which is based on 5.5%.
Yeah.
Now that can change.
It used to be 125%, didn't it? So they just keep.
You can get that still, but you've got to be a lower rate taxpayer, and you've got to be going on a 5-year fixed. So that's the Pension Regulation Authority rules that came in, whenever it was, a few years ago.
So you got a stress test at 5.5%, 145%.
That's the top end.
Yeah.
You can, if you're a lower rate taxpayer, because higher and lower rate taxpayer makes a difference.
But most property investors are going to be in the top of rate of tax, aren't they?
Yeah, and that's why most of them now buying SPVs. And I think by the time
So if you're buying a limited company,
yep.
What's the stress test on that then?
Exactly the same. The thing that property investors and business owners don't understand, initially, when you start buying out 1, 2, 3, 4, 5, the limited company is just an invisible entity.
Yeah.
It benefits you as the buyer from a tax perspective.
Yeah.
The lender does everything the same.
So they still see it as
a premium in terms of the interest rate and the arrangement fees they cost you.
But they still see it as lending to an individual, even though you're buying for a limited company.
Initially, until your portfolio gets to a certain size,
and what would that be?
PGs, all that sort of stuff.
So what's their certain size?
Lending around about £1 million, I reckon.
Oh, so easy to do, though, isn't it?
Yeah, it is. It is in the south.
So if a lender's into you, one lender's into you for 700 and one lender's into you for 300, are they looking at other banks that are lending to you and taking that?
So again, every lender's got their criteria. Some base it on the number of buy-to-lets that you have, so you can't have more than 4 with one particular bank, or even 3 because they don't want portfolios. Some will limit the number. Some will limit the amount of mortgages. Some will limit the amount of mortgages and the number of properties that you can have. But you can mix and match.
So some of the property banks that I call them property, that light property, the Shorebrooks, the Aldermores, the Paragons.
They're more commercial type lenders.
But they don't mind people having 20 properties, do they? No. But someone like a NatWest, the more high street ones are getting more fussy with it. Is that what you mean?
Yeah. You do pay a premium as well for being with those types of lenders.
But they're speedier, are they?
Yeah. Well, depends on what you're doing. So if you're doing a commercial HMO, for example, and looking for a commercial valuation where they base it on the income of the actual asset rather than the bricks and mortar property value, then that can be a nightmare to get through. But they do some cool stuff as well. Like Shorebrook will do a bridge to let product. Yeah. Where you can effectively bridge to buy it, do any conversion and any improvements that you need to, and then they immediately give you the refinance on the end. But they make it one product, so you don't have to pay 2 solicitors, you don't have to pay 2 valuation fees. The valuer who goes out here is assessing it based on almost like development finance.
So you get to know the same value. Yeah. And then that, but you still put your deposits in on the bridge valuation,
correct,
not the...
You put it on the bridge valuation, which will be your initial bricks and mortar, but then you get the refinance option based on what you're doing.
So you can get all your money out if you do it right, and they know what you're doing. Fantastic. Yeah. So, because Shorebrook love property, don't they? Yeah. It's weird why the high street banks are a bit nervous of it, aren't they?
Yeah. They've all got their niches, that's the thing. You know, you've got your Paragons, like you say, they're not really a residential lender, they're purely a buy-to-let lender.
Have you seen buy-to-let landlords get out because of the tax regulations?
It's coming. It's definitely coming. 2021 is when it's obviously going to really hit and really bite, because they're all going to get their tax bills by that point and realise.
So do you think there's
going to be some offloading coming? Definitely coming from all the ones that own them personally.
Yeah. And you don't think they'll try and just do that where they can put them into a limited company because they've got so many? You need to have a lot to make prove your worth on that, don't you?
You have to show that you've... My understanding is...
Got employees.
You've got employees, you're in a partnership, so it has to be you own the properties, they're in a partnership, and then there's a way you can transition that into a limited company.
Without the stamp duty.
It's not a quick fix, it takes a number of years to do. And So it's not something I've had to do, so I don't know the full ins and outs of the process. But
check out Gary. How can people check your lovely self out?
So my handles are Gary Das at all social media channels.
We don't say handles, do we, Chuds?
No.
No. I don't know. But that's what cool people say. I'm going to start saying that.
Handles.
Handles.
Or if you want the company, then it's Active Mortgage.
Active Mortgage. So if you're an entrepreneur and you're a business owner and you want to get a new mortgage, then Gary Das is your man. Thanks for watching. Don't forget, leave some comments below. Gary, I'm sure, check some of the comments as well. We'll do our best to answer them. Thanks for listening. If you're watching, thanks for watching. See ya. Bye.